Ho, 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 tech enthusiasts. Welcome to the festive edition of Tech Stocks Daily, where we're decking the halls with loads of Yuletide tech magic. In today's frosty lineup, we'll unwrap Microsoft's exhilarating dance with jubilant investor bets, shining bright like a festive star. Then prepare for a blizzard of intrigue as ASML Holding finds itself amidst a snowy flurry of lawsuits over alleged securities mischief. Meanwhile, Symbotic's tangled lights reveal financial slip-ups that turned their numbers naughty. Lastly, brace yourselves as TD Bank strides into some scandalous Scrooge-worthy drama with shocking anti-money laundering lapses. So grab your cocoa, nestle by the fire, and let's jingle through this holiday-themed stock saga. Christmas is lighting up the tech world, and today's sleigh is riding on a snow-covered path emblazoned with the season's giant, Microsoft. Forgive me if I babble about them as if I've spotted a reindeer in the Silicon Valley skyline, but there's plenty of North Pole-worthy chatter circling Microsoft on the NASDAQ. Santa's list of attention-grabbing headlines starts with something twinkling in the options market. Big investors donning their plush caps and taking a bullish ride on Microsoft's sled. Major investors, or whales as we call them, are reportedly wagering a shiny $2.5 million on calls, compared to the more downbeat, or frosty, $1.8 million on puts. With strike prices soaring anywhere from $110 to an astronomical $490, Microsoft stock is flying high like Rudolph leading the Christmas parade in the investor galaxy. Word around the investors' workshop is that the stock elves have marked a holiday deal on Microsoft with target prices sparkling at $510 to $550, thanks to the thumbs up from savvy analysts like those from UBS and Loop Capital. With Microsoft's price-to-earnings Jeep filled with dreams at a not-too-steep 36.5, it seems UFO, unimaginable fiscal opportunity, might just land in optimistic investors' chimneys. Let's wrap up this hefty package by untangling some comparison lights, otherwise known as core company metrics, against its tech peers. Receiving admiration like a giant Christmas tree in Rockefeller Center, Microsoft's revenue growth is at a shimmering 16.4%, well beyond the industry wreath of 11.24%. Microsoft's profit, gleaming at $45.49 billion, shines miles brighter than what Santa usually fits in his digital sleigh. Wind whistles through the wintry breeze, bringing us to Steve Ballmer, the kind of gift that keeps on giving. Known for being jolly in his own right, Steve has harnessed that jovial spirit, bundling over 80% of his investment wishes on Microsoft's shimmering star. Backed by Microsoft-backed OpenAI's ChatGPT, which opened a whole new workshop of potential in 2022, Ballmer brings holiday cheer to his investment portfolio that's roasted those chestnut-style barricades to averages of a notable 28.37% yearly return. Just imagine Ballmer diving into that holiday pudding, $151 billion of cash-grabbing holly jolly, thanks in part to Microsoft and valued sports teams. Summing it up, Microsoft's proving to twinkle under the NASDAQ spotlight this snowy day, with great momentum across various financial fronts. Be you inspired by analysts, stock elf Ballmer, or even market metrics, it all wraps up the picture of a grand Microsoft-ian winter. Should you decipher this news in your own tech bells ringing way, remains as jolly as a ho-ho-ho. That'll be it for now, so whether you're investing or just decking those halls, Microsoft is this season's spectacular news highlight. Ho-ho-ho, sleigh bells are jingling, and guess who's been on Santa's naughty list today? It's ASML Holding NV, a giant in the semiconductor world, who found itself at the center of an icy storm of lawsuits and legal drama. Let's unwrap this tech tale, shall we? ASML Holding, a major player on the NASDAQ, has been spotlighted by two law firms, Braunstein, Gewirtz & Grossman LLC and Glancy, Pronge & Murray LLP, both ringing alarm bells over a class action lawsuit. This lawsuit isn't your typical Christmas tale. It's a story about alleged securities fraud that's got investors ruffling through their stockings to find coal. According to the grievances, it appears ASML has been accused of misrepresenting some critical operational hiccups. The elves at ASML seemingly overlooked, sharing some rather crucial information about problems in the semiconductor industry's supply chain. These missteps have been claimed to have been more severe than initially led on, and the ripple effect? A slower than expected sales recovery. Talk about a snowstorm of setbacks. But the plot thickens. It seems the company created a frosty illusion of having the right information about customer demand and anticipated growth. Meanwhile, hidden under the layers of wrapping paper, were concerns about macroeconomic fluctuations and stricter regulations that chilled their prospects, especially in semiconductor exports. Investors felt like someone shoved a melting snowball into their Christmas stockings when they realized these cheery statements lacked a reasonable basis. The pièce de résistance in this story? The disclosed financials on October 15, 2024, sent shivers down investors' spines. ASML reported a chilling quarterly booking decline by 53%, and the news cut through like a brisk winter wind, dropping ASML's stock price by $141.84. Ouch! The subsequent earnings call further dampened the holiday spirit, revealing that sales in China took a nosedive, impacting their margins negatively. This caused another stock dip of 46.91 cents per share. Brr, indeed. Both law firms, bearing festive yet serious faces, urged investors who picked up ASML shares during the class period to come forward by January 13, 2025. Investors were given the option to step into the role of lead plaintiff in this litigation, equivalent of a holiday confectionery mix-up. So, As ASML navigates through this blizzard with investors raising legal stakes, the tech giant needs to unwrap its strategies carefully moving forward. Surely, being part of such frosty filings is no one's ideal holiday wish, but for now, investors keep an eye on how ASML will tie this scandalous bow. Stay tuned, folks. This is the holiday drama gift that keeps on giving, and we're sure there will be more jingle-worthy updates on ASML as they make their way out of this winter wonderland of woes. Ho ho ho, tech enthusiasts. Today we're diving into the tale of Symbotic, where holiday cheer is on pause while the company's financial elves are getting coal in their stockings. Symbotic, an automation tech company, has got itself tangled in a bit of a financial fairy-light fiasco just before the festive season. Let's unwrap the news, shall we? Symbotic is in the headlines for restating its financial results for 3 recent quarters. It turns out those numbers weren't as merry and bright as they seemed. Picture someone sneaking by the financial naughty or nice radar. Pretty sneaky, right? Symbotic fessed up, noting that they had overstated their system's revenue and gross profit, while understating both their operating and net losses. Yikes. Not the kind of surprise you want to find under the tree. This unraveling began when Symbotic disclosed, picture a penguin sliding into view, that they found irregularities in their revenue recognition due to unbillable cost overruns. As a result, their system revenue was misrepresented by a hefty $30 to $40 million. This financial mishap subsequently spurred a snowstorm of lawsuits. That's right, they're now facing a securities fraud class action led by shareholder rights firm Hagens Berman. The allegations? Some serious accusations like improper revenue recognition and sly hiding of dodgy accounting practices. Litigator extraordinaire Reed Catherine, leading the charge, pointed out concerns about Symbotic's internal controls and how these might have overshadowed its true operational elf-on-the-shelf monitoring inefficiencies. It's a reminder that when you're juggling too many candy canes, some might drop. Adding an extra jingle to this bell, Bernstein Liebhard LLP also joined the fray, reminding investors of January deadlines in their class action suit. The focus is a claimed violation of the Securities Exchange Act of 1934, around when the numbers were cooked up between February 8th and November 26, 2024. They claim that senior offices spiced up figures like a questionable batch of eggnog, leaving a bitter aftertaste for investors. While Hagens Berman and Bernstein Liebhard are decking the halls with legal notices, they're also spreading the gift of encouragement. They're inviting investors with losses to step forward, perhaps dashing through the snow right into the claims process. The offer stands. Join as a lead plaintiff if you fancy being at the heart of the action, like a gingerbread star leading the way. Crucially, these firms remind us that pursuing justice comes at zilch cost because representation is on a contingency fee basis. Investors may not find a Scrooge-induced humbug to dampen their spirits because their wallets are safe. So whether you're roasting chestnuts or just checking stock profile peaks, keep your ears tuned into these updates. Symbotic's story is a classic cautionary tale in the tech world, proof that flashy numbers don't always reflect a genuine sparkle. Stay tuned as we watch how these legal sleigh rides develop. Hopefully, like Frosty, things will chill and investors' hearts will thaw toward happier investments with clearer transparency. Merry investigating. Ho ho. Hold on to your eggnog, tech fans, because today we're diving into a scandal naughtier than sneaking a peek at the Christmas gifts. Toronto Dominion Bank, yes, the folks from north of the border who manage our dollars and cents, find themselves tangled up in quite a legal mess that's not going to fit neatly under any Christmas tree. The spotlight today shines on TD Bank's shimmering financial blemish as they face securities class action suits around mysterious and alarmingly lax anti-money laundering practices. Picture this, you're sipping your cocoa when suddenly you realize TD Bank is allegedly letting 92% of their transactions go unmonitored for suspicious activities over several years. That's a jaw-dropping $18.3 trillion. Yes, trillion, like the numbers kids throw around when guessing Santa's Christmas budget. According to the US Department of Justice, TD Bank was trying to uphold a flat cost paradigm, which sounds like a geometric Christmas display, but is actually their alleged mandate to keep operational budgets flat year over year. The implication here is that compliance costs were sacrificed to maintain this vision, ultimately resulting in sizable fines and penalties. $3.09 billion worth, to be precise. It's a slap on the wrist that would send Scrooge right into the 21st century. Not impressive enough? This whole ordeal made history, making TD the largest bank in the US to admit to such conspiracy misconduct. Imagine TD Bank on Santa's naughty list with a pretty heavy lump of coal in the form of increased regulatory oversight. Ouch! But wait, there's more festive chaos. Investors are encouraged to step up for that class action lawsuit in hopes to reclaim some of those staggering losses post-revelation when TD Bank stock drooped like a day-old candy cane. Have your Christmas cookies and milk ready, because the Rosen law firm and Hagens Berman are spearheading separate suits to secure investor interests amidst this holiday drama. So, dear techie elves, what are your thoughts as TD scrambles to address internal compliance woes? Should investors feel jolly about seeking legal recourse and maybe getting something for that stock slump down the chimney? Or does this sound like another relentless battle against corporate Grinches? Let us know in your comments. As always, stay engaged, stay informed, And consider how drooping profits and swelling lawsuits might touch wider tech circles this festive season. Are your investments jingle-belling or just jingling? Share your thoughts. Tell us your own harebrained holiday investment tales, and don't forget to sprinkle some holiday cheer in the section below. All right, folks, let's put on our financial Santa hats and sleigh over to Microsoft's festive stock wonderland. Picture this: you're gazing at a snow globe of financials, and Microsoft's enchanting outlook with its soaring options plays and bullish investor vibes dances like sugar plum fairies. Now, you might wonder, should I toss my snowflakes into this frothy storm? Given the latest news, if I were sitting around the fireplace with my stocking full of stocks, I'd lean towards holding Microsoft at the moment. Here's why. 1. Investor enthusiasm. The fact that major whales are wagering big with calls suggests confidence and upward momentum. Their optimistic bets provide a warm, toasty feeling as Microsoft is viewed favorably despite market uncertainties. 2. Analysts shine. With analysts helming the sleigh ride to 510 to 550 targets, such encouragement reflects expectations of continued performance and opportunity, resonating with their expansive influence in AI through OpenAI's ChatGPT. 3. Financial metrics. Microsoft's sizzling sales growth and luminous profitability remind me of bright Christmas lights on a cold winter night. These numbers underscore resilience, especially when comparisons with industry peers look like they've brought a marshmallow to a snowball fight. 4. Seasonal seesaw. During festive periods, magical moments in market patterns can emerge. Microsoft's steady position amidst synthetic volatility offers a sense of festive stability. However, like unwrapping presents, each investor's path is colored by their circumstances and goals. Be sure to place Santa to your portfolio, not following any blinking light, but one led by thorough research and personal investment strategy. Check the fundamentals, future prospects, and of course, that naughty or nice list of risk appetites before making a move. Take time by the candlelight to analyze broader trends, for they've been as good as gold at leading investments down the right chimney. Stay frosty, do your so-called nice list homework, and see if under your holiday tree lies a Microsoft-shaped gift worthy of your investment. Happy holiday investing. Today's market activity felt like a holiday parade filled with sparkles, surprises, and a few plots resembling rowdy reindeer games. Microsoft stock rang in Christmas cheer with bullish bets and analyst praise, soaring high like the star atop a Christmas tree. Meanwhile, ASML and Symbotic found themselves exchanging merry for mayhem, tangled in lawsuits and numbers that make any investor's eggnog spoil. And not to be outdone, TD Bank unraveled a financial foil pricey enough to rain on any Grinch's parade. From skyrocketing stocks to lawsuits as frosty as a Canadian winter, today's trading tales highlight the highs and lows crowning the NASDAQ's merriest yet turbulent tech sector. And remember, whether you're sprucing up your portfolio or untangling Santa's gift ribbons, keep your investing perspectives as bright as Rudolph's nose. If you love this sleigh ride through the world of tech, don't forget to jingle all the way by liking, subscribing, and sharing our video, and keep those notifications on so you won't miss out on tomorrow's festive update, where we'll unwrap the newest surprises in tech.